Well, it looks like the U.S. China trade war just sent another shockwave through the global aviation industry. And this time, Indian Airlines might be the ones cashing in. Let's take a look at how this brewing trade dispute could surprisingly benefit Indian carriers, especially as they battle their own aircraft shortages. So, here's the story. Chinese airlines were set to receive around 100 Boeing 737 MAX jets and 11 Boeing 787 Dreamliners in the coming months. These are the exact same models ordered by Indian carriers like Air India Express and Akasa Air. But now, with China officially pulling back from Boeing, thanks to that hefty tariff fallout, experts in the airline industry are already forecasting a rerouting of some of these aircraft. Sources told the Times of India that they anticipate some of these aircraft, originally destined for Chinese carriers, will be redirected to Indian customers. And interestingly, this wouldn't be the first time. A similar situation unfolded over the past year or two when so-called whitetails were snapped up by Air India Express and Akasa. Both airlines are known to have the financial muscle to accept more aircraft if the timing and conditions are right. Akasa, in particular, has been hit hard by Boeing's ongoing delivery delays, so much so that it currently employs more pilots than it has jets for. That surplus has led to growing frustration among its cockpit crews, many of whom remain grounded while awaiting new aircraft deliveries. But the situation extends well beyond India and China. The escalating U.S. China trade dispute has now roped in global aerospace heavyweights. Aircraft manufacturers, suppliers, and airlines are reviewing contracts worth billions, unsure whether to proceed with deliveries or hold off until the tariff landscape stabilizes. And the numbers are staggering. China's big three airlines, Air China, China Eastern, and China Southern, had plans to receive around 179 Boeing aircraft between 2025 and 2027. But with the new tariffs and the directive from Beijing, those deals are now hanging in the balance. And while Boeing faces this storm, European manufacturer Airbus might find itself fielding new requests. China, which already relies on Airbus's popular A320 family, could lean even harder on the European manufacturer to fill the gap left by Boeing. Airbus, however, only has two final assembly lines for the A320 series, meaning there's only so much capacity available to meet China's demand. Interestingly, the restrictions don't stop at entire planes. China has also instructed its carriers to halt purchases of U.S.-made aircraft equipment and parts. Although two aerospace sources told Reuters they had yet to see an official blanket ban on American parts, this move signals deepening tensions that go beyond just new aircraft orders. Analysts are quick to point out that this could backfire for China. A full stop on U.S.-made components would severely jeopardize the country's domestic aircraft ambitions, particularly the C919, China's homegrown jet. As Bank of America analyst Ron Epstein bluntly put it, if China stops buying aircraft components from the U.S., the C919 program is halted or dead. That's a strong statement, but it underscores just how interdependent the global aerospace supply chain really is. What do you think? Will this trade spat give Indian Airlines a real edge, or is it just a short-term fix for a much bigger supply chain problem? Let me know your thoughts in the comments below. Thank you.